Hello, everyone. Thanks for joining and welcome back. Our guest today is Keith Weiner, founder and CEO of Monetary Metals. Welcome back, Keith.
Hey, Ivan, good to be here. Thanks.
Yeah, it's great to have you on. It's been a little while since we last talked, and last time we were talking about the silver and gold prices going up higher, and the fundamentals. Right now, we're at that 3,400 mark for gold, that $39 mark for silver. And I wanted to ask you, what is your outlook from now to the end of the year for precious metals?
Obviously the price has kind of taken a break from, we've been running up ferociously, um, and it's kind of taken a pause. I guess the technical people would call it consolidation. I don't tend to follow the technicals too much, but you can certainly see that, a lot of people are skeptical. Does it go higher from here? And, whether it's the Fed, whoever, like Pavlov's dogs has trained everybody from the second half of 2011 through 2018 into 2019, like ringing that bell. Every time the price goes up, um, there was a sharp pullback, and people were burned over and over and over and over. So, you get a pause in buying, you get some selling, whatever. But what's absolutely clear to me is this is a durable bull market.
Right.
This is something that's going because really it's a durable bear market in the dollar. Trust in the dollar is falling, love of the dollar is falling, um, and now with interest rates coming down, and they will come down a lot more. And I don't say that because of Trump. I've been saying that for a long time. This isn't sustainable, and if you worry about the U.S. government's ability to service its debts, they will be the absolute last party on planet Earth who will default. With
Right.
everyone else getting squeezed to default first, millions of small businesses, corporations and banks around the world all struggling with dollar debts and need lower interest rates in order to survive. So interest rates coming down means one less reason to hold paper. Paper for most people, they think gold doesn't have a yield. They don't know about monetary metals or whatever. Um, but if gold doesn't have a yield and paper does, you can see why some people are going to tend to prefer paper. Well, when paper's yield goes away, then that's one less reason to hold the paper versus the gold, which means gold price should, all else being equal, which it never is in economics. They have that term, ceteris paribus, all else being equal. But it takes away removes one reason not to buy gold, and for that and many other reasons, I think gold price going higher through now to the end of the year. I try to stay away from short-term predictions because short-term is noise.
Yeah.
So right now, yeah, there's a little bit of buying. Obviously, the price has blipped a little bit since around August 19. Um, but with that, the fundamentals have weakened just a hair. And that's, our old friend, the pattern of when the price blips, it's the buying of futures. And the people that are buying futures contracts are doing so with leverage in an attempt to front run what they imagine is going to be a great surge of physical. And when they're right, they make money, and when they're wrong, they front run only themselves. And that's what this is a tiny little ripple right now. I wouldn't read too much into this, but that seems to be what's going on at the moment. And people who buy futures have to be out of the trade soon. First of all, there's a cost, to doing that. There's the cost of credit. They're buying on credit. And then number two, they're doing with great leverage, so which is a lot of fun on the way up and a lot of pain on the way down. So when it goes up, they take their profits. When it goes down, they take their losses. Either way, this is not usually a durable long-term position. The way when somebody buys coins, they take them home and stack them. Those
Right.
aren't generally coming back to market for years, decades, leave them to the grandkids, whatever. Um, so that's what I see in the market at the moment, and slightly more bullish silver than gold in the short term. Not huge, not by a big amount, but silver should probably, again, ceteris paribus, silver should outperform gold in this next little bit. So does that mean we see $41 silver and 34.50 gold? Yeah, it could be. Um, both metals have a fundamental price that's a hair above the market price at the moment. That's
Right.
come in a bit. It's not massively above, it's slightly above. Um, and everybody probably wants the clarity of will they do it, will they not do it in September? Plus fund managers are very often on holiday right now. In the U.S., in the northern parts anyway, back to school is either next week or the week after.
Right.
So a lot of people are out on the boat for one last outing or on the beach or whatever, and then the fund managers come back, and then they figure out, okay, what do we want to do? And either they're going to be buying some asset class or selling some asset class. Right now, you may have a bit more autopilot, and nobody wants to change a strategy when the boss is out of the office, in a macro fund or something. So we're in that, moment before whatever is going to happen in the fall.
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button, hit the like button, and also hit the notification bell so you don't miss any future uploads. Back to the video. A lot of people in the precious metals market space, Keith, they say, there's market manipulation or there's spoofing. Are you in the same camp that you say, okay, there is market manipulation or there is spoofing, and or are you not?
So there's a great concept of a fallacious argument or fallacy. There's not, a lot of people are familiar with argumentum ad hominem, or some of the formal Greek named fallacies where if I say A causes B, does that mean B causes A? Not necessarily. But there's one that's lesser known called the Mott and Bailey fallacy
Okay.
from a medieval, sort of fortified town. So the Mott is that tiny little column, that little sort of tower that's made out of fixed stone walls in the center, and then around it you have the Bailey, which is usually like a wooden stockade fence. Now, the Mott was very defensible, but also very unpleasant to live inside of it because you have all the people, all the human waste, and the animals and the animal waste, everything all cooped up in a tiny little space. So very defensible. That's not a pleasant place. That's not the position you want to be in for very long. The
Right.
Bailey was a lot more pleasant. You'd have room to spread out, but not really terribly defensible. If another army is coming over the hill, you didn't want to be behind that wooden stockade wall. You wanted to be behind the stone walls. So the Mott and Bailey fallacy is when somebody gives a version of the argument that is, aggressive, and that's sort of the Bailey. And then whenever anybody pushes on it, they retreat to their Mott and say, "Oh, we're just saying this."
Hmm.
Um, you see it in politics all the time. I'm not going to repeat any of the political arguments because I don't want to, start controversies. And you see it here. So people say the gold price is manipulated. And what they mean is that if it weren't for some shadowy cabal, the gold price would be $50,000 an ounce today.
Right.
So they have kept the price down by, what is that, 90, so 47,000 out of 50, you know, $94,000, 94% down below where it should be. And they're doing so for decades. That's the Bailey.
Right.
And when you push on that and say, come on. And so I wrote an article that was basically an open letter to Ted Butler. He contributed his final piece and he said, well, I'm an old man now. I've contributed my work. I've shown world, manipulation. And he recapitulated his whole argument. And I encourage thoughtful disagreement, if anybody has any. So I said, okay, I'll take you up on that. Here's thoughtful disagreement with Ted Butler, the article I put out there. Every gold and silver website, including all the conspiracy ones, covered it, linked it. I became a one word name person. Articles, Weiner said this, Weiner doesn't want to know that, whatever. I was like, okay, I guess you're really a celebrity when you're a one name person. And that article went to everywhere. And I said, okay, let me start by summarizing your argument. I'm trying to make a steel man, a summary of your argument that even you would accept. This is what you're saying. And now I said, okay, here's my theory. And whenever you have two competing theories, you're looking for a corner case that should behave opposite depending on which theory is correct. Let's go
Right.
find that corner case. Let's test it. And we presented all the data we've been gathering from gold and silver markets. We licensed something called the Tick History Database. It is every bid and every offer in every futures contract and spot for gold and silver with sub-millisecond resolution. This
Okay.
is many terabytes of data going back to 1996. With all the data we had, I proved conclusively my point that the big banks are arbitrageurs, not manipulators. That
Okay.
should be the definitive proof. That's it. Unless somebody wants to attack my argument, which nobody did. Okay, fine. Um, the people that argue that gold is manipulated retreat to the mot, which is spoofing and front running,
Right.
which, by the way, is illegal. And so I think the most recent one was a couple of traders from JP Morgan were arrested and convicted, or at least one of them was convicted and went to prison. I don't know if the other one had some sort of fine, and I don't know, his career was destroyed anyway. Um, and this is a practice. So spoofing is when you put in, very rapidly, you put in an order just to try to convince every algorithm that's watching that there's more buyers or more sellers or whatever, and then you withdraw the order before anybody would hit. So if you put in a bid, before anybody hits your bid, you pull out, and that convinces everybody the market's falling, supposedly.
Right.
And then front running is when, if you're a big bank, you have a lot of customers that are putting in orders. You know where those orders are, and so then you shave a few pennies out of the market by coming in just under them or just over them in order to scalp a few pennies. Both of these things are illegal. Both of these things, I could write a paper arguing why they probably shouldn't be illegal. Um, Front running is certainly unethical. I mean, if you're taking orders from a customer, you kind of have a fiduciary, maybe not a fiduciary responsibility duty, but you have a responsibility not to abuse them. But anyways, be that as it may, it is definitely illegal. You can definitely go to prison if you get caught doing this. Some
Right.
guys have been caught doing this. At least one guy did go to prison. But that's not the same thing. This is the Mott, not the Bailey. This is saying that, yeah, these traders at this bank got caught, front running the customers or spoofing the market. That's not going to move the market from $50,000 down to $3,000 and hold
No.
it that way for decades. No,
Right.
that is not directional, not really distorting the price more than a blip of noise, on the hourly chart or the minute chart or something like that. Um, and the customers who were affected could argue they were screwed out of thousands of dollars or maybe hundreds of thousands of dollars if they were big customers. But for everybody else who's looking at the chart and saying, "Hey, it's no fair. I bought silver at $48 back in 2011, and silver is supposed to be $500 by now, and it's not, and therefore these guys are responsible for my loss." No, this is
Right.
Mott and Bailey fallacy. The Bailey is the aggressive argument that everybody wants to believe in. When you check them on it, when you challenge them on it, which I do, then they retreat to the Mott, spoofing and front running, which are true. The Mott argument is usually true, but it doesn't support the Bailey argument, which is where everybody really wants to be. And so, yes, yes and no. Is there shit going on in the market? There shouldn't. At least there was. Something tells me that after somebody goes to prison, all the banks are going to look at their processes and procedures and add more controls and more rules. You
Absolutely.
know, First of all, the banks have fines when this happens. Secondly, they take a black eye. None of them want this. By the way, to put this in perspective, the bullion business for a big bank is a tiny, tiny, tiny little sliver of a business. The bullion desk might have 20 people at
Wow.
the bank or something like that in a big bank. This
Right.
is an enterprise with like, two, 300,000 employees globally. This is a little 20-person business, with a P&L that might be hundreds of millions of dollars. I'm trying to remember what the numbers were when Scotiabank tried to sell the Makata Bullion Bank. Okay, granted, that's not as big as JP Morgan. I want to say it was a P&L of like $600 million. It's a rounding error. I guarantee you the banks are not willing to take, the brand and franchise risk that, oh, this bank got convicted for cheating in the market. It isn't worth it. They'd rather
Mm.
shut it down before they take that risk. So somebody goes to prison, everybody, left behind is now subject to more rules, which they'll welcome because they don't want to go to prison either,
Right.
obviously. And so is that happening right now? I would be much more dubious that it's happening now after that happened. But anyways, it did happen. That's a fact. Criminally convicted in court. Criminal convictions are pretty hard to obtain unless you can really prove whatever happened. Guy went to jail. I guess he's out of jail by now. That was already years ago now. Um, should the gold price be thousands of dollars higher?
No, yeah, it's
I
not going to
think
cause a
so.
94%, hold
Or
on
even
the.
$1,000, not
Right.
happening.
Interesting.
if you want to distort a market and hold its price away from the natural clearing price, it takes, all the resources of like a national government. Like, oh, the other argument they cite is there was a gold pool in the 1960s leading up to the 1971 crisis where Nixon defaulted.
Right.
That took the resources of the United States government, the UK government, and other major governments, and they were able to hold the line for a few years until they were overrun by the market. This is
Right.
the most powerful, richest, biggest government in the world, and arguably other arguably leading governments, spending national resource level commitments to this. And yeah, they held it for a while, but that wasn't thousands of dollars. That was probably dollars or tens of dollars, during most of that ramp up. And then when the distortion became greater than that, they were overrun pretty quickly. And I haven't looked at the data in a decade plus, but the rate at which gold was outflowing from the U.S. Treasury to maintain that gold pool in London, it was at a rate that you could plot. So the U.S. government, by the time Nixon defaulted, had 8,000 tons left. You could plot a line, and it was like by 1972, the U.S. government would have been completely depleted of gold if they'd continued at the rate that gold was being pulled out to
Oh,
support this.
yeah.
Massive, 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 massive resources, way beyond a bank, and in fact, beyond the U.S. government, because it took other governments in collusion. That's
Wow.
what a real manipulation looks like. The resources that go into it grow exponentially until they're overrun. You can't, even the U.S. government can't fight the market like that.
Wow.
And nothing like that is going on today. Sorry.
Wow. No, no, that's fantastic. That's a really great education for us because when you put it in that perspective and you have all the biggest, governments in the world and they can't even hold it against the free market, that puts it into perspective like, oh, you just can't hold back the free market and yeah, that makes a lot of sense.
I've seen pictures of like soccer matches. Sorry, in Europe they call them football, where something happens and there's a crowd that wants to push through a fence or something like that. And
Hmm.
I remember seeing this picture. I think this poor guy was killed. The crowd is pushing, and he's the front guy at the sort of chain link fence,
Right.
and he's like being pushed. You can see his face being pushed through the slot in the chain link fence. He's like being extruded. His
Jeez.
flesh is like and that's the zombie horde when it moves.
There's
I
no
don't care if you
stopping
have a
it.
gun, I don't care if you have a chainsaw, I don't care if you're government and you have an army with machine guns. Like, you're not holding back that tide. No
Yeah.
way. The
Yeah.
only thing to do is get out of its way and let it do what it wants to do. And for good or for ill, it doesn't want to bid gold up to $50,000 just yet. And by the way, one other thing I would add to my little rant. By the way, you know, if gold were to rush up to $50,000, you might look at the amount of gold you have and say, "Wow, I'd be rich." Um, Nominally, right? Because that means the currency is collapsing, so gold is worth more in terms of something that's falling.
Right.
But you wouldn't want to be living in that world.
It'd be
Just imagine
chaos.
having a fistful of dollars in Caracas, Venezuela. Okay, could you buy a Ferrari with it? Maybe. If you were seen driving around in a Ferrari there, they'll kill you.
Yeah, absolutely.
But it'd just be a horrible, horrible world. That's a sort of an apocalyptic collapse. Society in ruins, and people will kill anybody they think has more than them out of envy and out of an attempt to get your money because they're desperate for food.
Wow.
And you know, nobody should want to see that, even though nominally, okay, whatever number of ounces of gold you have, to see it go up to 50,000, it's a lot more dollars. You don't want to be there.
If you're a gold owner, you already know about all the ways precious metals can hedge yourself against financial instability. Monetary Metals is revolutionizing how people can invest in gold and silver. Right now, there's opportunities for you to earn 4% interest on your gold paid in gold in their marketplace. Now is the time to secure your wealth in an asset that the government can't inflate away. Join thousands of investors earning interest in physical gold and silver every single month with Monetary Metals. Grow your gold over time so that you're not just preserving, but growing your wealth in an asset that can't get inflated away by just printing more money. Visit the link in the description below to get started now. Yeah. It
That's
would,
not
it
the way to
would,
riches. That's the way to Mad Max.
Yeah, yeah, absolutely. I agree with you. Now, Keith, before you go, I want you to maybe just give one piece of guidance for there's a lot of youth that's joining us on this channel and across social media in the silver and gold space. What would be kind of your one piece of guidance for them?
Study, read different, especially read different opinions. Get out of your echo chamber, whatever. That's the problem with algorithms on social media,
Right.
is they tend to show you two things: stuff you love and stuff you really hate, whatever it is you engage with.
Yeah.
So if people see posts that they hate and really engage with it, they get more of that, and they think, oh my God, social media is a sewer. And then if people engage with stuff they like, they get more and more of that, and they think, oh man, everybody's brilliant here. This is so much better than my work where everybody's an idiot. Get outside your echo chamber, read stuff you don't like. If you think gold is manipulated, read my stuff. If you think gold isn't manipulated, because I've convinced you, go read Ted Butler, go read some of the other things. Get outside and study, think, and ask yourself, okay, if that were true, then what would also have to be true? If the U.S. government doesn't have the gold it says it does, and meanwhile every year the Auditor General says he's been auditing it, what would that mean? How many people work at the Auditor General have to be in on the conspiracy? Have you ever
Right.
seen a situation where thousands of people over 30 years keep a secret? Does that make sense? Does that fit human nature? Is that how
Mm.
society works? If
No.
it isn't, question that. I don't want to say question everything because it takes a certain amount of knowledge and competency to question something. If you don't know anything about biology, questioning, vaccines or whatever, you're not gonna. But you can learn about it. Read real scientific articles. Don't just read, social media. And the same thing applies to gold. Same thing applies to precious metals. Gold versus crypto. I had a debate. They invited me to debate at the Soho Forum, which is sponsored by the Reason Foundation. The debate took place at the Mises Institute in Auburn, Alabama. And I
Hmm.
debated Pierre Rochard, who's a pretty prominent Bitcoin guy. And I argued for gold, he argued for Bitcoin. Watch that debate. You said young people. I imagine most young people are thinking Bitcoin rather than gold. Gold is for boomers. By the way, I'm not a boomer. I'm Gen X. Hey, hey, hello. We're not forgotten yet. We're the little generation in between the two bigger generations, the boomers and the millennials. But on a serious note, um, Bitcoin has a set of properties. Gold has a set of properties, and they're not the same.
Right.
And when you think about systemic risk, the thing that, and this is my argument why money has to be a commodity and it can't be some digital number or any kind of credit in any kind of system. There's a point at which you need to take your marbles out of the sandbox and put them in your pocket and go home. And that means taking a physical thing home with you. And when you think of all the physical things you might take home, whether it be a car, refrigerator, food, gold won that contest, over a period of thousands of years because it's portable and divisible and recombinable and not perishable and doesn't even tarnish and all these different things. That's why gold won, and that's the thing. If you want to take your marbles and leave, the marbles are gold.
Right.
But read, study, think about it, read my arguments, see my video, see the video of that debate that's widely available on YouTube. But see other things too. Listen, learn, read, think. Everybody's got to get educated. Unfortunately,
Right.
we're in a world where you can't just sit back and trust the experts, which, that's how the world should be. You get on an airplane, you shouldn't have to be an expert aircraft engineer, an expert pilot, an expert air traffic controller. You get in your seat, you sit down, you relax, you put on your earphones, you listen to some tunes, and you trust that the plane's going to take off safely, it's going to navigate to where you want it to go, and it's going to land safely.
Right.
And for planes, that's a reasonable assumption. For the monetary system, not so much.
No, I totally agree with that. Well, Keith, I really want to thank you for that guidance because that really, that's probably the most valuable guidance we've ever had on this channel is, study, learn, and actually get outside of your own, thought process and bubble and, start to look at opposite opinions so that way you can actually make an
Yeah.
informed decision. But before you go, I really want people to connect with you. I want them to connect with Monetary Metals. I'm going to put the links in the description below, but where can they connect with you?
On Twitter, I'm at Real Keith Weiner, and monetary-metals.com has the majority of my work and articles on money and gold and credit and bond market and gold price and so many other things. I think I've probably put out 2,500 articles. So there's a lot of it. It's a big rabbit hole. It goes
Wow.
down a long way.
A lot of
But
reading to do.
happy reading.
Well, Keith, I want to thank you so much again. Such a huge pleasure having you come down to speak to the silver and the gold community. And as the market develops, as always, would really love to have you back on.
Thanks so much.
Talk to you soon.